All right. Home prices are up. Rates are up. Is affordability gone? Is it impossible for the average person to buy a home? I'm going to talk about that in today's video. I'm going to talk about the quickest rise in interest rates in the last 3 months since 1994. I'm going to talk about what it means for the average consumer, what I see coming, do we see a crash, and all that good stuff. All right, Matt, the mortgage guy here, residential mortgage broker. I talk to people all day, every day, consumers, real estate agents, other mortgage folks. I try to give you the most honest and up-to-date feedback I possibly can. I'm not going to paint it all as rosy. I'm also not going to come out with FUD to make you click the link or watch the channel, right? I'm just going to give you honest, straight back opinion based on what I'm seeing, what I'm hearing, what I'm feeling, whether that's buyer sentiment, whether that's affordability, whether that's, what people are saying and doing in the real estate market in 2022. So as we all know, home price appreciation simply hasn't slowed down over the last couple of years. Home prices continue to go up. Along with that, since August of 2021, we've seen a real ramp up in mortgage interest rates. And what that does is it makes the payment higher, right? And so it becomes harder and harder for somebody to buy when not only does the home price go up, but the cost to borrow the money, the vast majority of people are using, to buy a home. They're not all buying cash. When that goes up as well, and that added 1% in interest adds $200, $300, $400 to your mortgage payment, it makes it harder and harder, right? So I want to go over in this video, maybe some real stats that are going to dispel some of the fear, uncertainty, and doubt around, oh my gosh, payments have gone up 28% over the last so many months. Nobody can buy anymore. And other stuff that I see out there that just plain isn't true, right? And like I said, I'm not going to paint it all rosy. Obviously a big fan of real estate and home ownership, but I realize it's tough right now for some people. So first off, I want to share some stats because when people say home prices are up and mortgage rates are up, that's just, things are unaffordable. They feel that way, right? They're not talking about true stats. They're just talking about, I feel like it's high, it should go lower. Well, that's no basis for anything. That's certainly not a basis for we're going to see a real estate crash, right? If you look at stats from 1990, right? We're going to go back 30 years. Average home price of $126,800, an average interest rate of 10.86. If you take that payment in 1990 with that interest rate, it's $1,137 a month, which sounds cheap today. But if you adjust for inflation to 2022 prices, you've got a $2,486 a month payment, right? Sounds pretty high. Let's take today's median, about $410,000, and a 4.5% rate. That payment's somewhere around $2,000. So that 1990 home price and rate taken, 30 years forward and accounting for inflation, it's actually cheaper today than it was in 1990. In the 90s, did we see a price crash because it was too high? No, right? And so I think that's something to keep in mind. Even in the mid fours, we're no longer in the mid twos. Rates are still historically low. And when you go back to a time like 1990, when we're double-digit interest rates, you can see that the cost or the monthly payment, which is how people buy, right? If you want to talk about like buyer sentiment and how people make decisions around what they're going to buy, how much they're going to buy, it's mostly payment, right? You can look at price, you can look at interest rate, but ultimately, can I afford this payment for this house? That's how people make decisions around what they're going to buy. The media last week was spreading a little FUD when they're talking about payments have gone up 28%. I don't even remember the time period that they went over, right? But prices are up, rates are up. Yes, payments are up. But here's the truth. And this was a 1 year span. This was 21 to 22. It might have been January to January, might have been February to February, whatever the case. Low threes in 21 and a $244,000 loan was how they calculated this. A 1079 payment. And they were, and here's what they didn't take into account. They just said that payment, fast forward a year to a $280,000 average loan size and a mid fours payment or rate. I'm sorry. Which they did this back in February. So it was probably low fours, 1377 payment. So they just took, let's call it February to February. 1079 payment goes to 1377. Payments are up 28%. This is ludicrous. Nobody can afford this. What they didn't take into account, if you take the 1079 from 2021 and you look at that versus the average income, $53.95 a month, that payment versus the income is 20%. And I know this is only the principal and interest. We're not factoring in tax and insurance, but still 20% of your income goes to the principal and interest on this purchase for this average loan size of 244 and this rate of 3.375. Then you fast forward a year and you're saying, look, now the average loan size is 280. Now the average interest rate is 4.25. And the payment for that is 1377, up 28%. Well, also factor in a 6% wage increase. And when you do that and you take 53.95 to 57.19, guess what happens? 20% P&I versus your income number in 2021 turns into 23% in 2022. Up, yes. Crummy, yes. Don't like it? Yes. Astronomical? No, it's 3%. Here's the other part. That's a 6% wage increase, not even factoring in the private sector, it's 9%. If you got a 9% wage increase from 21 to 22, it's even closer, right? So I'm not saying this to say that, things are are great, right? We've got inventory problems. It's hard to get an offer accepted. You got to offer against 15 or 20 other buyers. You got to go 50 or 60,000 above list. You've got to do all kinds of stuff with your contingencies. It is tough, right? But from a strictly affordability standpoint, it's not as bad as they're going to make it seem, right? And truth be told, going into Q2 with some of these concerns and interest rates going up, demand is going to quell. More inventory is coming on. I think we're going to see a little bit of a slowdown. Again, going from 80 miles an hour to 30 is not a correction. It's not going backwards. It's slowing down. But from affordability standpoint, is it a little less affordable? Yes. Is it completely unaffordable? No. And I know I'll probably get some comments along the lines of the average person or somebody just starting out. I know, I understand it. And more than anybody, I think, who's a champion for the consumer, who's trying to help people buy their first home, it's frustrating. It's hard. It doesn't feel fair if you don't have 30,000 to make up an appraisal gap, you're not even in the game. That, I think, is going to change. I think in 2022, those folks are going to stand a chance. I think FHA makes a comeback, putting 3.5% down, not having to deal with an appraisal gap. This stuff comes Q2, Q3 of 2022. I truly believe it. I hope for it, right? But from an affordability standpoint, don't say that home prices are so unaffordable that we're going to see a 40% crash. It's just not the truth, right? And anybody who's making those videos, some of the data they use is just plain wrong, right? Less affordable than last year, sure, but still not unaffordable in the whole scheme of things. Rates higher than last year, sure. 4.5% interest rate, pretty darn good. Yes. All right. That's enough about that. Thanks for watching. Hopefully this was helpful. Go to greatmortgagebroker.com, fill out the form if you want to get pre-approved. If you're looking to refinance, anything you need, let us know where you're at, how we can help. We'll be in touch soon. Thanks for watching. And until next time, we gonna see. I didn't mention that credit thing, but check out that credit thing in the link, right? $2 a month if you're just getting started or if you're trying to reestablish credit, right? It shows positive payments on your credit and it shows low debt utilization. Sorry, I get sidetracked easily. Squirrel. Where's the squirrels?